Welcome back. You're watching The Money Show with me, Kavita Thapliyal. So what's in store for large cap funds? With most investors turning towards passive large caps, to active large cap funds would gather investors' trust, and with the broad-based rally in the market and valuations being comfortable, large cap funds will gain momentum. Let's answer all of these questions. I have with me Nirav Karkera, Head of Research, Fisdom. Nirav, good evening and welcome to the show. So definitely investing in large cap is gaining momentum via the passive strategy or the passive investment options. I want you to help our viewers about the kind of broad-based rally that we've seen in large cap and the kind of impact we might see on large cap funds going ahead. How true it is, the momentum that we are talking about, and also the kind of valuations that we are seeing in large cap, a huge run-up already seen in mid-cap and small-cap, that's where the fear has slightly come into the investors, that would this kind of profit or earning would remain or would continue, would sustain. But then large-cap is a very interesting zone right now, specifically active large-cap. What's your view on it and what does your research say?
So I'll, probably take the second question first because that's far more simpler to answer. So when we talk about valuations in the large cap space, it is clearly not cheap right now. I would say that. However, considering the context around small caps and mid caps, it is relatively more favorable in large caps at this point in time. And in fact, if you look at the earnings growth trajectory and you pencil in all the expectations and forecasts, growth forecasts, one tends to form a picture that large caps are available at slightly reasonable to slightly costly sort of valuations at this moment in time. However, most opportunities that are available in the large cap space now is available at a fairly decent valuation, especially in context of the growth that we are expecting. And so on the valuation side, I feel large caps are favorably positioned at this point in time, and more so when compared with small and mid cap counterparts. Secondly, if we were to talk about the value proposition offered by active large cap funds, so it is about time that actively managed large cap funds got us due credits, because for the longest period in time now, it seems like a really long time that actively managed large cap funds are compared with large cap indices, and they have been underperforming since quite a few years, except for this very recent year. So over the past year or so, actively managed large cap funds have been performing, and most of it, as you rightly mentioned, is attributable to the broad-based rally. So what happened before this year is that there was a narrow rally. There was a lot of liquidity in the market. There was a lot of influx of inflows, especially from foreign investors, and all of these inflows were collectively getting accumulated in very select pockets in a very narrow and resulting in a very narrow rally within the index. And these select pockets are, as you can already see how it reflected in the indices, were heavyweights on the indices. However, that is changing right now. So the money, the capital inflow is now spreading out across the market, not just limited to large cap, but it is reaching to the deeper and farther ends of the market. So the rally that we are seeing right now is much more broad based, and this is offering fund managers an opportunity to capitalize upon their skill sets of sector allocations and stock picking. So right now, the effect is seen in the form of large cap, actively managed large cap funds outperforming indices, and the cause is active fund management and impeccable stock picking and sectoral allocation strategies that are finally bearing fruit.
So also considering a case where there is exposure or the kind of funds where there is exposure of large cap, talking about flexi caps, which are more dominated, which we have a lot of flexi cap funds where they are large cap heavy. What about the change in story over there, or change in movement or momentum over there in those kind of funds?
So, flexi cap funds still continue to remain large cap oriented, and the major reason could probably, while talking about it, we could probably circle back to the very initial set of conversation that we had on today's episode. That is, the valuations are looking far more favorable, like, especially in context of the growth opportunity that is available within the large cap universe. So, the flexi cap mix remains largely within similar ranges. It still remains skewed towards large caps. Obviously, there are a few cases within the flexi cap category wherein one could notice an increase in mid and small cap allocations, but we believe that it is transitory and it has to do with the run up in value of small and mid cap holdings more than new mid and small cap holdings added to the portfolio in most such cases. So there remains an orientation, a bias towards large cap and slightly larger mid caps if one were to look at it from a much more nuanced perspective.
Nirav, what kind of sectors and stocks in large cap are mutual funds going heavy or aggressive?
So one thing you'll realize when we spoke about active share increasing within large cap funds and smart sectoral allocation is something that I spoke about, you'll realize that many large cap funds are not shying away from taking sectoral calls and being slightly aggressive with the allocations therein. So one case in point is IT. So while IT claims a very heavy share, approximately 13 to 14 odd percent on the indices, the category itself is meaningfully underweight. Meaningfully underweight by almost 4 percentage points, right? So that's where there is a sectoral allocation that has come into play. On the pharma side of the sector, the category has been allocating tactically to select names, and it is slightly more overweight there. I feel the category is, has been really aggressive on allocating to capital goods and industrials as broader sectors, and this has also been bearing fruit in terms of incremental performance for all such funds. So these are a few sectors where large cap funds are trying and taking very very nuanced call, and such nuanced call does not always have to be overweight calls, but it also includes cases where underweight really helps. Like case in point IT, wherein they were underweight, and IT we all know since the past couple of quarters has been under a lot of pressure. So large caps have been able to successfully navigate this rough patch by being underweight on this sector, at least till now.
So now, considering this analysis that you've just shared with us, Nirav, what are the large cap funds that you are recommending? And also, is it really time to consider active large cap funds?
So again, I'll take the second question first. I feel
Okay.
it is indeed so, because that's the simpler one, right? So it is indeed time to consider actively managed large cap funds. So active versus passive was never really the true debate. It is about allocation and what are you expecting. So it is not really comparable. Both of these categories, active and passive, are managed through different mandates and different set of rules. अगर आप एक अलग नजरिए से देखते हो, if you view it from a different lens, you'll realize that many active funds also behave like passive because they stick to their set of rules, and passive indices in a way is actively managed because they frequently rebalance to align with their primary rules. I know obviously it may sound counterintuitive, but we'll leave it for some other conversation where I'll double click on this concept. But one must understand that actively managed large cap funds do present a very strong value proposition, and if the objective is to generate alpha, there are going to be opportunities in India structurally. Fundamentally, actively managed large cap funds warrant an allocation. There could be patches wherein the index could outperform it, but that's like with any other category, right? There could be another category where the index could outperform it for a certain period. It's just that we haven't seen it happen as often as we saw in the large cap. So yes, there is definitely scope for allocation to actively managed large cap funds, and it's not just seasonal. Is what I'm trying to impress upon the viewers. Second, let's talk about the large cap funds that we are particularly looking at and looking at really closely. So at Fisdom, we have our own mutual fund rating methodology, and as per those Fisdom mutual fund rating methodology, we have realized that there are a few large cap funds that hold immense promise in terms of delivering value to investors. And at the top of the list, I would say there are two funds. One is Mirai Asset Large Cap Fund and Canara Robeco Blue Chip Fund. These two are outstanding funds for investors looking for a true to label mandate, funds where they are going to stick to the large cap mandate in its truest essence and spirit. I feel these two funds are really fantastic. There are another two funds which tend to, go slightly rise beyond what is expected from them. They step up to the occasion. They want to manage it more aggressively for the investors who have an appetite for slightly more aggressive and nuanced calls, and that would include Nippon Large Cap Fund and ICICI Prudential Blue Chip Fund. Now, the thing with these two funds are they are very nimble with their allocations, and they tend to deviate. They are not really trying to hug the index, while the others are also not. They are consciously making an attempt to deviate and take bets beyond what the index is indicating, and they utilize the residual 20%. So a large cap fund is mandated to invest minimum 80% into large cap stocks, and they have a 20% buffer zone. So this 20% makes a whole world of difference when I talk about these two funds here, where they have been really smart about the 20% allocation, and they deviate beyond large cap. They don't shy away from entering the mid cap zone and create and deliver value to investors. There is obviously always the argument that when an investor invests in a large cap, it is really looking out only the investor is only looking out for value that can be created through large cap alone. So an allocation, an investor can always manage allocation at his end. But for those who don't mind an extra kicker, these two funds are really well positioned. So four funds in all: Mirai Asset Large Cap Fund, Canara Robeco Blue Chip Fund, ICICI Prudential Blue Chip Fund, and Nippon Large Cap.
All right, so with these funds, it's a comeback for large cap funds. Thank you so much, Nirav, for being on the show and helping our viewers understand the way ahead for large cap active strategy.